Hey, Dan Passarelli here. Happy Hump Day, Wednesday that is. And we are looking at, continuing this uptrend. We're bumping up in the SPY against the 50-day moving average, which tends to act as a pivot point, support, or resistance line. Notably, a couple of days ago, the 21-day moving average crossed below the 50-day moving average, which can lead to some follow through, but to the downside, but it didn't. And so from a technical standpoint, that's really the best thing we have to go off is that 50-day moving average. It does coincide with other resistance sitting right here. So tomorrow's going to be a pivotal day from a technical standpoint. Now, fundamentally, that's really what's driving the market. The news in PPI and CPI this week gave a little buoyancy to the market, especially yesterday. But what's interesting is a couple of things. Well, first of all, it seems to me the new focus is really going to be a lot more heavily weighted on the unemployment rate, and we get that Thursday weekly non-farm payrolls figures tomorrow morning. And so tomorrow morning we could have some movement. Now, obviously, what this is all about is, well, what I think it's really all about at this point is will we or won't we go into recession? And the chances of that have increased by many of the major banks' models. And then the interest rate, there have been people talking about an emergency interest rate rise. I even mentioned that in one of our videos as a thing that has happened historically on rare occasion, but has happened. But seems like that would be a very unlikely event. What's more likely is what we can take from the CME Group's Fed funds rate contracts. Right as of today, the traders who trade the Fed funds contract is pricing in about a 65% chance of a 25 basis point cut at the next Fed meeting, which is a little over a month away, 35 days away. And therefore a 35% chance of a 50 basis point cut. Now, interestingly, yesterday there was a bit slightly greater chance of a 50 basis point cut relative to a 25 basis point cut. So there's a lot of changing of ways we look at the world among the professional traders, both the banks and the traders trading these contracts. So that is one of the things that I think is going to continue driving this volatility. We did see the VIX pull back. It's now trading about 1626 just before the close today. And I think there's a pretty likely chance that that will end up continuing higher. So we look for opportunities to buy options or just buy buy VIX outright. And that's how I'm playing it. This is Dan Passarelli, Trade Smart.